All right. One of the most critical factors in selling a home is getting the price just right. So too high, you scare buyers away. Too low, there's always a worry that you're leaving money on the table. So today we're going to dive into the science and psychology of pricing in real estate. How to set the right price, how the market reacts, and what sellers need to know to maximize their sale. Let's start with the key truth. Pricing is strategic. It's not random. Every dollar matters. And so the way that you position your home can mean the difference between a quick competitive sale or months of frustration. We tell sellers all the time, the best relationship with us is going to be a short one, not one that's a long one. So let's break it all down. Pricing is not a guessing game. It's based on 4 key factors. All right. So you have location, condition, market trends, and buyer demand. Let's start with location. You hear it all the time in real estate. Location, location, location. That's the biggest influencers. That's where the top-rated schools are, the places that have the most amenities, the best lifestyle appeal, the neighborhood appeal, all play a role in this. When we talk condition, let's be honest. Updated homes fetch higher prices. Houses that need work, buyers want to try and deduct the cost of that. Now, obviously, that is dependent on location. Location supersedes everything. When it comes to market condition, in a seller's market, like we're in right now, homes move fast. In a buyer's market, pricing aggressively matters more than ever. Buyer demand is, what are buyers actively looking for? Are they prioritizing space? Are they prioritizing style, schools? You have to understand what the buyer is looking for in order to help you price it appropriately. So even with these factors, pricing strategies make a big impact, and that's because the psychology of pricing can influence how buyers respond. Let's get into how pricing affects buyer perception. All right, let's talk psychology. Buyers don't just look at the price; they react to how it's positioned. And here's what we mean by that. Have you ever wondered why something priced at $499,000 feels like a deal? $500,000 feels a little expensive. It's called charm pricing. And here's why it works. It feels more affordable. Okay. Buyers set search filters based on round numbers. So $250,000 increments, $500,000 increments, even $1 million increments. So if you price something in this example at $505,000, you might miss all the buyers that are searching under 500. So here's another one. It's called price banding. If every home in your area is listed between, let's say, $950,000 and $1 million, but you price yours at $979,000, you're going to stand out instead of blending in. Price banding is about finding that sweet spot to stand out. So you take a band of pricing and you try to put yourself somewhere in between there in a way that's going to separate you from the rest of the pack. Now, there's a danger to overpricing and how the market reacts to that. Overpricing is more common than you'd think. It's the number one mistake that sellers make. A home priced too high gets ignored, and then it lingers on the market. And then when buyers see higher days on market, they assume something's wrong with the house. The house could be awesome, but you're shooting for that trophy price and it might not be worth that price. So you really have to listen to the market at the time that you're listing. More days on market means less buyer interest. Price cuts can kind of backfire. All right. Buyers assume sometimes there's desperation. So there's a strategy behind price cuts as well. You don't really want to be chasing the market. That's something that we talk about in real estate a lot. When you aim too high at the beginning and you come down and down and down, what you're ending up doing is chasing the market down. It's kind of a race to the bottom, let's say, and it can detract from the value that you could have gotten if you priced it appropriately at the start. So if you price it competitively at the start, you have a better chance of going up versus let's aim for the high number and then work our way down. We do hear that all the time from sellers that, well, if I'm going to get it, it's going to be in this market, which yes, to a degree, but you have to be within reason. You got to find that right price band when you're talking about listing high and but still remaining competitive. Not to mention another factor that gets discussed not as much as it should. When you price it really high, you're actually helping your competition. And an overpriced home makes fairly priced ones look like a steal. So it's not a good strategy to go with. So you really have to rely on a experienced professional in whatever community you're in, whatever neighborhood you're in. If your home's sitting on the market, you should not sit. All right. You need to act. But this goes back to motivation. So if you're not interested really in selling, or I'm only going to sell if I get the right price, it might not be the best thing for you to be on the market. You might need to test that price as a private exclusive or an off-market sale. When you hit the market, you need to be ready to move. And so if you're sitting on the market, the best thing that you can do as a seller, if you're getting limited showings, no offers, you need to, instead of small, repeated price drops, act quickly with a strategic reduction into a new price tier. That's going to bring a whole new pool of buyers in that might have been looking at it up here, but they're too afraid to jump in. But now that you're in their tier, now they want to go and see it because now they feel like, all right, now it's attainable. Okay. So let's use pricing to create demand. So what do I mean by that? So underpricing. Sometimes pricing something lower than you know it's going to go for can actually make you more money. So in a strong seller's market like we're in right now, it's 2025, pricing just below market value can create a bidding war. And when you get a bidding war, you get limited or no contingencies. You get a lot more leverage as a seller because you're able to dictate terms a lot more than you would in a more balanced or a buyer's market. So we'll do a quick case study, right? Home listed at $475,000, sold for $510,000 due to demand. Underpricing is only a strategy that works when demand is really strong. If you're like me and you fell asleep in econ class, wake up, pay attention. In a slow market, you're risking selling too low. But in a demand heavy market like we're in right now, because there's not a lot of inventory, underpricing can work. And that's why having the right strategy for the conditions is key. A low inventory and high demand market in prime DMV areas like we're in the greater Annapolis and the Chesapeake region, pricing's even more crucial because of low housing inventory, particularly in sought after waterfront and suburban communities. A well-priced home here can trigger immediate offers and even bidding wars, while an overpriced home will quickly be overlooked in favor of more competitively priced options. Now, luxury and waterfront pricing nuances do exist. Waterfront properties, especially in Anne Arundel, Queen Anne's, Talbot County, they follow a little bit different pricing pattern. So unlike suburban homes that rely heavily on comparable sales, waterfront pricing considers factors like water depth, view, direct access. It does factor in all the other stuff that comes with the property, but there's an added element to it that we need to consider, and that can help drive pricing up. Two homes on the same street can have a wildly different value depending on boating access and shoreline quality. Then we have high pricing sensitivity in areas like Northern Virginia and DC. We don't really work those markets all the time, but if you're selling in Northern Virginia or DC proper, buyers are extremely price sensitive due to the high cost of living and elevated mortgage rates. So if you mispriced a condo or a row house in DC that can sit for weeks, a home that's correctly priced for demand, especially near metro lines and schools and business hubs, those can sell fast. Like we said, the longer that you sit, the less you're going to get. Buyers' preference for lifestyle over square footage. So in our market, lifestyle is a major driver of value. Someone looking in Severna Park or Edgewater isn't just looking for square footage. They want water access. They want community amenities. They want top-rated schools. Pricing has to reflect more than just the comps. It has to align with what buyers value in that specific area. Luxury market dynamics in Greater Baltimore versus Annapolis. Luxury homes in Greater Baltimore have a different pricing rhythm than those in Annapolis. So you could look at a neighborhood like Roland Park or Ruxton. A luxury market there often needs more aggressive price reductions. And when it comes to Annapolis luxury buyers, especially those coming from DC or New York City, they're willing to pay for a turnkey waterfront home without hesitations. There's a little bit less aggressive price reductions here than what we see in Baltimore. Baltimore competes with, in that region, you're typically getting a lot more space, but you're also getting a higher tax bracket depending on where that house is in Baltimore, especially if it's in city limits. The truth is, pricing is an art and a science. It's about numbers, but it's also about buyer psychology and market momentum. You can have the same price today. It's probably not going to be the same price in a month. This is not like the stock market where it fluctuates every day, but we have to go with the rhythm of the market at the time that you want to enter it. So the bottom line is know your market and price it smart. Use psychology to attract buyers. You want to avoid overpricing and making your listings stale. You want to adjust strategically, not desperately, particularly in the luxury markets. You want to consider demand-based pricing for bidding wars. If you're thinking of selling or you just want to talk strategy and reach out, we'd be happy to help you price your home the right way for today's market.